Alright guys, Gen Z Ricer here, and today we got a very packed video. We got our portfolio update. We're going to talk about Roundhill, more about Roundhill. We got Kurv because I made a concept for Kurv, a Kmag. And so, yeah, it's going to be a very packed video. First off, we're going to go over to our Discord real quick. I just want to say that we somehow made it to over 50 people in the Discord, even though it's been up for like 2 weeks. Hopefully, if you guys like this channel and like my journey or follow my journey, then you go to my Discord. We're trying to build a nice community of investors who all are like-minded and also level-headed. A lot of people are very biased, whether they are all into total return, NAV erosion, NAV depletion, NAV appreciation, and we aren't biased like that. We want to take all you guys in. We aren't all yield max, we talk about funds that are stable, and we're just trying to expand the community. Honestly, the best part of making these videos isn't the video itself, but it's actually just to grow my community of investors, because investing with other people, taking their guidance and opinions is a lot better than doing everything yourself. But yeah, looking at the portfolio, $164,000 in value. You guys in the last update saw we were at $174,000 in value, so we're down $10,000. Last week was rough, and as you can see, our buying power is down over $90,000. We spent $90,000 in the last 2 trading days, and I don't want to hear fluff from you guys saying that you're going to blow your portfolio. I do not care. We are going to find out. If you want to see me blow my portfolio or not, follow the journey and we'll see. But it is what it is. So you can see margin total $180,000, margin use $144,000. We got $35,000 of buying power left. And I guess you could say, if you believe in margin stacking, then this is very good, because we can spend more than what we have in our buffer, right? You can spend $35,000, but you got a $66,000 margin buffer. So it's very good. And it's at 40%, so it's very healthy right now. We added a lot of stocks. Looking down right here, right off the bat, you can see 10,000 plus shares of Ymax. Yeah, we went hard in Ymax, because looking at what Palantir did, it reminds you that it's better to be indexed or having a fund of funds rather than having a single stock. You gotta remember though, but Ymax pays over a 30% yield, so it's a very good fund at the same time. XDT went up. Looking down more, we got some more QQQI, GPIC, GPIX, AIPI, TSLP, NFLP, and we're adding T-SPY soon. We can go over to the buying tab, and as you can see, man, we went crazy. And you guys should know that when I buy the dip, the market keeps on dipping. So even though I bought on Thursday, and guess what? Everything I bought on Thursday is in the red now because it kept dipping on Friday. So honestly, I'm probably the worst trader alive. The meme is pretty accurate. When you buy in, then the market will start going down. But when you sell out, like I did with Coney, I sold Coney. Guess what? Coney went up $2. So truly the worst trader alive. Moving on, we got a small position in Palantir, PLTW. I bought it when it was down 23% or so on, inception day, and it kept going down. We're down 11% now. This is just a test position, but you can see this is a problem right here, and I have a problem, I guess not with Roundhill, but my hopes for a product that they were releasing, I guess have been shot. First off, we're going to go to portfolio update right here. Yeah, guys, 10,600 shares of Ymax. It's paying us $1,600 at the rate of 15 cents per share. It's paying us $1,600 per week and $6,400 per month in passive income. And again, our stuff is still not updated the most. I only update the big things. The smaller things will do it eventually. But it's saying that our income is currently $13,000 per month. So this is very crazy. $117,000. The original investment is at least 18% right now. Break even time is supposedly 8.4 or almost 8.5 months. Our reinvestment allocations, we still gotta look at that one day. Don't know when, but eventually, so we know where our money is going. Total return tracker, again, not updated. So honestly, I really shouldn't show this tab for a while. You can see the distributions though. Ymax has paid $8,000 in distributions. Misty $6,000. So at least you can see this information here. Distributions, we got paid on Friday $2,113 from distributions this week. So it's pretty decent. It's not the best, obviously. The best was $5,000 from last, I guess, the last distribution with Misty in it. We can look at our theoreticals tab. Essentially, this is very messy because this is what I did throughout the week, but we're looking at this chart specifically, which shows the total of everything. And I guess I spent $95,000, which is more than the intention, because the intention was to spend our $44,000 of injected capital, margin it to the max. So that's another $44,000. So realistically, this should have been $88,000, but instead we're at $95,000. Couldn't help the dip, guys. I could not help the dip. So yeah, we went overboard, and we may buy more. You know, if it keeps on dipping, we got to see what our options are. But spending all of this money, we were able to get these shares, right? And our weekly income has supposedly gone up about $700. Monthly income has gone up supposedly $2,800. Very close to the $15,000 per month in distributions. We're getting there. All right, now I want to go to Roundhill, all right? Because I don't know if you guys were expecting this, but we got leverage funds, and this was not what I was expecting, nor I feel like most people were expecting. They're going to be trading at 1-2 times leverage, which again, I didn't want leverage funds because my portfolio is already leveraged with margin. The expectation was that we were going to get individual funds on the underliers, which would have been covered call ETFs, right? And my expectation was we were going to get something in the middle grounds between yieldmax. Yieldmax pays the maximum yield at the cost of NAV erosion, but we trust Roundhill because they got XDTE, and for other people QDTE and RDTE. But mainly we would get something that, you know, did options trading on Meta or Palantir, Tesla. You would get a lesser yield than TSLY from Yieldmax, but your share price would go down slower than Yieldmax or not at all, depending on what the yield is intended to be. So yeah, I was really hoping that these would have been covered call ETFs, because if that were the case, then a fund of funds of their ETFs would have came out eventually. So instead of investing more into Ymax, then as you can see, I was hoping they would have made an RMax soon, which would have been a more better version of Ymax. Again, we know what Ymax, they keep adding everything and including garbage like Murny, right? And we can't get rid of the garbage. So it's pretty much diluting Ymax, and this is an issue. And if Yieldmax won't fix that issue, then the only hope is that competition came in, and that hope was in Roundhill. But as you can see, Roundhill dropped the ball, leverage funds instead of covered call ETFs. So now there's another hope, and the hope is Kurv. Solution is Kurv sees opportunity and comes in. Hopefully they make a Kmag or a Kmax, but they don't release many funds really. They only have the Magnificent 7 currently, so a Kmax is probably not going to happen. But essentially a fund of funds, as we seemingly aren't getting a RMax or an RMag. A Kmag is possible as they already have the Magnificent 7. We can go to their website, look, Amazon, Apple, Google, Microsoft, Netflix, and Tesla, so they can make their own Kmag already. It's just a matter of making it or not, their own fund of funds. So the problem is you need to look at Ymax. Ymax is the Magnificent 7. It pays weekly. The problem is 7 is an odd number. So, and there's normally 4 weeks in a month. So if you got 2, 2, and 2, 1 week will pay 1 distribution instead of distributions from 2 stocks, right? So on that 1 week where it has 1 single fund paying, it's going to be a really low yield. With Yieldmax, it's the Microsoft week, I believe, which pays 5 cents on that specific week, which 5 cents is very bad. So I'm hoping that Kurv basically sees the opportunity in making their fund better. You make an 8 stock, right? So you have another fund right here, and essentially they can aim for either a higher yield stock or a more NAV stable stock. And then this is going to be a fund better than Ymax already. You're going to get some market share from the Ymax Yieldmax holders, because this will fix the issue of having a bad payer on one of the weeks, which we can see in Ymax. So yeah, hopefully they make a Magnificent 8. And right here, it's how to entice investors. So this is going towards Howard, and hopefully the investors see this part and they get interested and spread the information also. We know with Kurv that their assets under management, for some people it's a concern and it's growing slowly. So how do you entice investors? You need to make the fund of funds a weekly payer. It needs to pay on Wednesday or sooner specifically. Why Wednesday or sooner? It's because a lot of people in the high yield community, they invest into Yieldmax, and the X day for Yieldmax and most other funds is on Thursday, right? Because the payday ends up being on Friday. Everyone pays on Friday and X day is on Thursday, which is the day everything dips. If you make your payment on Wednesday, investors who are trying to get paid daily, who are in Yieldmax and whatnot, they're going to want to buy your fund because they're going to be able to drip that money into X day in their other funds. This will help with the velocity of money. As a company, you know, if you know this is what a lot of people want, I mean, do it, right? It shouldn't be hard to make your payment day instead of Friday on Wednesday. That shouldn't be hard at all. You need to make your expense ratio lower than Ymax, or I guess Kmag. Their expense ratio is between 1.29 and 0.99. You need to aim for a 15% yield. Alright, listen closely. Aim for a 15% yield at least. It's gonna beat competition. You're gonna beat your Yieldmax Biggie and Soxy competition because those aim to pay 12% distributions, and most funds pay a 12% distribution like QQQI and SPY. Investors need to ask themselves, do I want to be indexed and more safer and get a 12% yield? Or do I want to get 12% from Kurv, which has a low asset under management and it's a smaller company? Obviously, it's a no-brainer to buy QQQI or SPY, right? So this is why you need to make your yield bigger than the generic 12% yielders. It should be lower than XDTE, which I believe is around 17%, which makes it a very slight hedge against the market downfall. Alright, you guys need to listen carefully right here. It seems the sweet spot between share price appreciation, a flat chart, and also NAV erosion is about, let's say, between 12% and 15%. We can look at QQQI, for example, right? We can look at it. This pays about 12 to 14%. You look at the 1 year chart and it is going up. So you can look at XDTE and this pays what, about 17%. You look at the 1 year chart, this is flat, but because the market has been doing bad, it's to the downside. And a lot of people like Roundhill, and let me make the point, it's a really good fund, right? The problem is if there's a market downturn and XDTE falls 30%, for example, right? This might be like QYLD, where it starts trading flat at the new price, which is down to like what, $40, $35. So this is a problem with the flat chart. It's good now when the market's good and there's no correction or market crash, but if there's an actual market crash, again, 25%, 30%, your Roundhill XDTE might be trading flat at the new lowered share price, which a lot of people aren't going to like. Again, QYLD is the example. It's been around for many years, but the chart keeps going down over the long run. And I'm not bashing on XDT. Obviously, I got a lot of money in it also. I'm just saying, even though it's a flat chart now, this might bite us in the rear end in the future. We can look at SPY-T, I believe, which aims for a 20% distribution. So this is the higher out of the safer index funds. 1 year chart. Oh, that's a bad chart. You can see it's trending downwards also, which is, again, not good if you try to think about it from the longevity point of view, because in the future a crash will happen eventually and it'll be trading at the lower share price and it won't be able to go back up in price if it's trading flat now in a decent market. This is why I say it should aim for at least a 15% yield. It's going to beat the competition, which is paying 12%, but it's going to have a very slight share appreciation to it, assuming everything works out. It's a slight hedge against a market downfall, because if it's able to share price appreciate, we're not looking for full share price appreciation. The idea is that it's slightly better than XDTE. And if the chart is slightly better, it's going to go up better as the whole market starts to rebound after a correction happens. So we're trying to hedge against a future market downturn, right? Again, we're not asking for 10% per year, which is asking for a very slight better share price appreciation than XDTE. And obviously, if your distribution is slightly lower than XDTE, it means the chart should be slightly better also over time as the market corrects itself and as the market starts to go back up after a correction. But yeah, guys, hopefully we get a Kmag soon from Kurv. This right here says if Kmax is ever made, it needs to have the ability to remove trash stocks like Murney from Ymax. But because Kurv does not focus on making funds left and right, then realistically we won't ever get a Kmax. And the caveat is because Kmag is realistically just the Magnificent 7. Hopefully they make a Magnificent 8. Then we're not going to have funds added to it, so we won't need the ability to remove stocks from Kmag because there's not going to be more stocks going into it in the future. And if you made it this far, share this if you can on social media like Twitter and whatnot, whatever social media you are using if it deals with the high yield community. Hopefully you share it to other YouTubers the idea of Kurv making a K Mag, a Magnificent 8, all right, that pays weekly, that's on Wednesday at the very latest. For now, at least we aren't getting this from Roundhill, and I don't see them releasing covered call ETFs anytime soon because it took them so long to finally release more stocks, and the stocks ended up being leveraged funds. So I don't see them releasing more anytime soon. So if you guys made it this far, then thanks for watching. And again, check out our Discord. The link is going to be in the description.